Guys, this might be the best opportunity to buy a home within the last 2 years. The Feds just dropped rates again, and this will be the second time they dropped rates in the last 2 months. Donald Trump is in office. Bitcoin is at $92,000. Guys, the markets are responding. In today's video, I'm going to give you a full home buyer's guide, the ins and outs on how to purchase your first home. Guys, stay tuned. Welcome back to the channel, guys. Welcome to the channel. I'm Credit Coach Q, and today, me and a special guest is going to introduce a home buyer's guide. But before we get to the video, guys, please like, subscribe to the channel. It allows you to push this content to a wider audience and allows us to leave the lights on. Guys, please like and subscribe to the channel. If you have anything derogatory in your credit report, I mean anything negative, charge-offs, late payments, bankruptcies, medical bills, guys, you name it, please go over to mycreditapproved.com. It's the website and the software that I was telling you about that allows you to put the full experience to your own hands. Guys, people are removing thousands of dollars worth of debt by themselves. They are no longer using credit repair companies. They are putting this information and this experience into their own hands and appreciating on a deeper level. Guys, please go to mycreditapproved.com, check out the software and start removing these items, guys, if you have anything derogatory on your credit report. Now, let's dive straight into the meat and potatoes of this video. Guys, I'm super excited about this video. I'm going to flip the screen and go over and introduce our partner and our guests for this episode. Guys, stay tuned. Welcome back to the channel, guys. Guys, like I said, I'm super excited about this video because we have a special guest, loan officer who cares. Welcome back to the channel, man. I'm super excited for you to be here.
Thank you so much, man. I appreciate the invite. I appreciate the opportunity to come in, man, and chop it up with you and your people, man. So thanks for sharing your craft with me. Credit Coach Q in the building. Thank you so much, my brother.
No problem, man. I'm super excited that you are here. The rates, like I said, guys, are down. Donald Trump is in office and everything has been going up in a upward trajectory since then, and it might be a very special time to buy. So if you're looking to buy, I wanted to bring that to the public and give you guys a home buyer's guide, a guide that's going to give you a bulletproof gateway to home ownership during this opportunity. Rates have been down, has dropped twice in the last 60 days from this video, and I think that if you are looking to buy, you might have a great opportunity. We have one of the best loan originators in the state of Texas. If you've been on the channel, you have seen them before. We actually have done great numbers talking about real estate, chopping it up, talking about all different types of stuff. But let's dive straight into the meat and potatoes, man. So I wanted to break this down to you guys by I wanted to show you guys the breakdown on the home buyer's guide before I give loan officer who cares the floor. Okay, so it's broken down in 7 different steps, right? So the first step is the pre-approval versus the pre-qualifications, because a lot of people think that because they are pre-approved, they are already pre-qualified, and those two are different. We're going to break that down for you today. And then we're going to talk about the credit score requirements. See, a lot of people think that they need a 700, 800 to buy a home. That's not the case. You can buy a home with a 500 credit score, depending on variables. We'll talk about that as well. Then there's number 3, the truth about down payment assistance. So a lot of these builders or contractors will give you incentives by saying there's down payment assistance and things like that. We're going to go over that. Then we're going to talk about the closing costs and prepaid. See, a lot of people don't know that you still have to have a closing cost. Most people that never bought a house think that the only thing they need is a credit score and a job and they can buy a home. No, it's actually closing costs that's involved with the purchase as well. So we're going to talk about that. And then number 5, the importance of building a solid team from lender to title company to facilitate the smooth transition. Now, this is very important. It's very important for you to have a solid base when it comes to real estate. A lot of people in the real estate game, it's not always as trustworthy as the next one. So you have to be very critical on the team that you are putting in place for a 30-year contract. This is your home that you are thinking about buying, and you want to make sure that you are surrounding yourself with the right people. We're going to talk about that. And then number 6 is financing options available based upon the profile and the employment type. So depending on how much money you're making, depending on how your credit profile is set up, is going to give you different qualifications and different approval odds for 4 different loan amounts. A $400,000 and $500,000 loan is a lot different than a $250,000 loan. And then last but not least, number 7, the homestead exemption, ways to save on monthly taxes paid. So yeah, we're gonna talk about that as well, and that's going to be a goodie. All right, so I'm going to bring it over to Loan Officer Who Cares, and he's going to basically break these 7 steps down because he's the professional, and we're going to have a dialogue here. So yes, Loan Officer, we can definitely start on the pre-approval versus the pre-qualifications.
Okay, thank you so much, man. I appreciate the information, man. I appreciate the opportunity to share this stuff with your audience once again. Pre-approval versus pre-qualification. Pre-qualification is basically like we have a conversation. Hey, do you work? Have you been working for more than 2 years? Are you W-2? Are you self-employed? What's your credit look like? What does your debt look like? So just a pre-qualification, basically kind of like just vetting the customer, based upon a phone call. Haven't seen any application, haven't seen the credit score, right? Haven't seen any documentation, but just a conversation. That's what kind of pre-qualification is, right? Pre-approval gets a little bit more in depth. Okay, so with the pre-approval now is that we're going to get you to say, based upon this pre-qualification conversation, right? We're going to say, okay, you qualify. Let's get an application in on you, right? Now you've done the application. We've got the credit score. We look at everything. We look at the income. You sent us the W-2s. If you work for a company, self-employed, you send us your taxes, right? We got the bank statements to show the assets. Now everything lines up with what you put on the application, and we run our AUS, our automatic underwriting findings, get an approval. Now that's a pre-approval, right? Because now we looked at everything, and now we know your true buying power based upon documentation versus a conversation. Can you dig it?
Right. So basically the qualification, guys, is just a conversation, word of mouth, saying that you qualify based off what you are telling the real estate professional at the time. Pre-approval is actually vetting everything that you're saying. So if you say that you make $250,000, then we're going to need documentation that's going to vet that statement, and the documents will give you the approval. The qualify is basically a person who says that they have a certain financial profile already verbally. The pre-approval is actually going through and vetting everything and crossing the T's and dotting the I's, right?
Yes, sir. Absolutely.
Okay. All right. So the credit score requirements. I know a lot of people, like I said, think that you need a 700-800 credit score to get a home. In some cases, probably so, but not in all cases. If you are looking to buy a starter single family home, it doesn't take you to have a 700 or 800 credit score. Loan officer, what is the credit score that you can get approvals for?
With my lenders, I can go as low as 500 as far as a credit score. For an FHA loan, 10% down in this case, right? 580 and above is FHA. I can get you 3.5% down with that, okay? For the lenders that I work with.
For sure.
For the FHA.
So guys, you didn't know that you can get a house with $500,000. With a 500 credit score, but he said 10% down. So
yes, sir.
The average credit score that a person, the average purchase for a home is around like a $200,000 to $300,000 range. So if you're looking for like a $250,000 home, you're going to need $25,000 down with that 500 credit score for the down payment, excluding your employment history and everything else they make, right?
Yes, sir.
Okay. So the credit score, we can get you to 500. Now, what is it now? Is there any limitations with the 500? Like, is they limited to just a $400,000, $300,000 home? Like, how far can that 500 credit score get them in terms of a home?
Whatever their income allows them to get, and their debt and their income, that 500 will get them there. As long as the debt to income ratio can support everything, and they've shown that, okay, this 500 credit score is not just a way of life, maybe an anomaly or something like that, and shown great, on paper, it looked really great and shown some stability. And no, man, that they have no limits on that. They're not limited to like only 400,000 home or 500,000. They're looked at just the same as someone with a 700 credit score as far as the qualifications is concerned.
Oh, wow. So guys, that is a very, very crucial takeaway in my opinion, because a lot of people think that that because they have a 700-800 credit score that, it's going to be easy pickings. Like, the most important aspect of purchasing a home through a lender is your DTI. A DTI is your debt to income ratio. And the debt to income ratio is basically the amount of money that you make versus the amount of money that you have to pay bills with, right? So if you are making $4,000 and your bills is $4,000, then your debt to income ratio is 0, right? Or 100. Which one? Am I saying it right?
Yeah. Yes, sir. So they look at the front end, whatever. They got a front end debt ratio and a back end, right? They take your income minus the debts and everything that you have, and you have your front end. The back end will include the mortgage payment. So there's limitations on those numbers. FHA allows a higher back end debt to income ratio, 55 and above, if you will, like 56.4 or something like that, right? FHA, conventional finance, cap you out around 45 or 50 as far as the debt to income ratio. So it just all depends on the amount of debt that you're holding. Will determine what loan product will be best for you.
Oh man. So like your debt to income ratio does not necessarily goes up because you make a lot of money, because it all goes off your spending habits and your lifestyle. So if, like I said, if you make $40,000 a month and you spend $40,000 a month, then you don't have a good debt to income ratio. Your debt to income ratio is comparable to somebody that make $3,000 a month, just because you're not actually retaining any of the money. The money is always going out to bills and things like that. So if you do have a good debt to income ratio, meaning that you have good income coming in, you live beneath your means. Like, you make good money at your job, you have, a good savings habits and things like that. And, you live in an apartment that you can pay for 3 to 4 times, you might be ready for a home and not even know it. And because you thinking you need a certain credit score or whatever, you think that you might not qualify, but you actually might. I've seen this guy give people homes with 500 credit scores. I see him give people homes with a lot of miraculous ways, to say the least. So guys, shout out to Loan Officer Who Cares. If you do not know how to get in contact with him, make sure you can contact him on all platforms. Loan Officer Who Cares. He is licensed in Texas, but I don't know if he's going to be open for dialogue for anyone outside of the state of Texas. But reach out to him. He is a wizard when it comes to getting people approvals, because a lot of people don't understand the approval process. All right, so let's talk about the truth about down payment assistance. So I'm gonna let you take the lead on that one.
I have a saying that I always tell to my customers a lot: free is expensive. And I repeat that: free is expensive. There's no really free, right? So it's going to cost you something in order to get that. So with down payment assistance, there are options out there to help with the out-of-pocket expenses that come with purchasing a home, where there's programs that'll take care of that. But on the other side of that, it comes with a higher rate, because there's someone else who's putting their money on the line where you're not having to. So they're going to secure that investment by having a higher rate, because you become a higher risk to them because they're putting the down payment assistance. It's out there and it's available, and not saying they're all bad, but they just have to be fitting to your situation and to your particular budget. In reference to that, there's some, like they have city programs that restrict you to certain areas, certain back-end debt to income ratio, certain income. So there's certain ones that the lenders have that they service themselves that don't have those restrictions on them as well. But again, it just all depends on what your budget looks like. How I try to combat that sometimes, if someone kind of balks at the higher rate when it comes to the down payment assistance, is that have the realtor to negotiate some seller credits in reference on the file to try to absorb some of the costs that's associated with the home as well. That way they're not tied into that higher rate that comes with the down payment, because again, a higher rate is going to cost you more over time, right? So in order to just try to come with a quick solution that becomes a long-term pain point, let's try to explore all the options when it comes to down payment assistance.
Man, as you can see, guys, I know he said a lot of stuff that y'all probably don't even know what it means, like seller's credits and things like that. Those are creative ways where he's basically going to make sure that the loan and the lifespan of the loan benefits you as a consumer. A lot of basically, in a nutshell, from what he said, is that down payment assistance has a price, and most people who offer it makes their money on the back end when it comes to the rate. So instead of you getting a 5% interest rate, they might give you a 6.2% interest rate, and that 1.2 is the down payment. Instead of paying it, you paying it on the interest rate, and instead of a $25,000 down payment, you're actually, through the lifespan of the loan, might pay, I don't know, $70,000, right? So like you have to be careful when it comes to the people that is selling incentives for homes. Now we're gonna go, because I'm thinking about this, it just goes back to, I think it's number 7, or finding a team. No, it's actually number 5, the importance of building a solid team, because down payment assistance is, those products can be predatory, but they are very, very attractive. Down payment assistance programs, it looks good on paper, but for the most part, when you put the numbers in and you see where they're actually getting their payback, it doesn't be good for you. So let's talk about the importance of a team. If you can, if you can give the audience any stories or any quick references on why it is super important building a good real estate agent, having a good real estate agent, having a good loan originator, a loan officer, and having a good title company, all the above, building a great team when purchasing a home.
Absolutely, man. That's a great question. Well, as far as building a team, I mean, we all, talk about team sports. It's not just one person. It's a combination of everybody coming together at the right time, doing their job the right way to the highest level to get to the common goal of getting this customer into a home, correct? So when you talk about the lender perspective, the loan originator, we start the process as far as the financing is concerned. But if we have the realtor, a lot of times they'll come to the realtor, the real estate agent, to seek someone that knows how to put financing together for them, right? So the realtor has to have integrity for themselves and not just see their commission, and not seeing that buyer as an individual who may not afford the $300,000 home and may be okay with $250,000, but not try to push that just because they're trying to push their commission, right? And then also you work with a lender that's going to be responsive, that's going to put the file together truthfully, and then going to even give the true numbers out and always overestimate what the cost is going to be, but just want to make sure that the borrower is comfortable and not house poor at the end of the day. And we finance them for more homes than they truly can afford. And then now we took this American dream and turned it into American nightmare, right? And then now, as we have the right lender that be able to have the right underwriting department, that be able to be responsive to those questions, common sense underwriting guidelines that help move the file forward so it quickly closes for the file. You have a title company, opens documents, closes documents, whether the transaction takes place, responding to open title requests, responding to things that may be needed throughout the process, really responsible at moving this thing forward, getting stuff back at the right time. Even with an appraisal, make sure that they go at the proper time, make sure that they get the report back in the proper time frame, right? Make sure that it's clear report, make sure that report is correct and that it doesn't have to be resubmitted again, thus delaying the process, right? So everybody, man, all incorporated, man, has to make sure that they're on top of their game and doing their job the right way for the customer at the end of the day. Because if we're talking about first-time home buyers, they're already nervous about process. They're already going to have a million questions. So you just have to be able to be available. What is that saying? The best ability is your availability. So we want to make sure that we're available to support them, because guess what? When the check clears and we're cashing that and we're celebrating those wins, you know what? We're having fun with that. Keep that same energy when we're supporting that customer as well. So that's why I say the importance of a great team will get you where you need to be. But I know that was a lot of information, but hopefully you guys picked up some nuggets off that plate.
For sure. All right, let's go into closing costs. Okay, so what is closing costs and how does it work?
Closing costs are what we call costs associated with the loan, right? Some are you pay before the loan, some you pay after the fact, right? So we're looking at closing costs. We have what we call an appraisal. So you want to see what the value of the home is worth. So someone has to get paid to do that. And then you have to have your inspection. You want to have an inspection on your property. Earnest money. Whenever you look at a property, we get a pre-approval out. You and the realtor negotiate a great sales price. You enter a contract, and then to show how serious you are about that particular property, you put down what they call earnest money that goes towards your cost to close on this home, right? Your down payment for the home. So you put that down to count. What did you say?
Okay. All right. So let's rewind a little bit. You say an inspection. Okay. How much is the inspection normally?
Typically $350, $400 and something dollars, just depending on the inspector and how far, how rural the place is or how accessible the dwelling is.
So around $400. All right.
Yeah, around 400 or so. I guess estimate if I would estimate correctly.
Now I know these answers. I'm asking for y'all because I know he's saying terms that you guys probably don't know. I know you know what an inspection is, but you probably don't know how much they can range from. They can range. You probably think it costs $4,000, but $400. All right. For the earnest money, what is the percentage of the earnest money? What is the percentage of the purchase price that the customer customer usually pay towards earnest money?
It's typically 1%. It gets a little bit higher if the seller thinks it's going to be a little bit more harder to get the file to the closing table. So then they'll charge a little bit more, so they can kind of get it, build a little bit, build their pie up a little bit. But yeah, it's typically 1%, and then you pay the earnest money and the option fee.
Okay, how much is the option fee?
$150, $250, something like that. It ranges from that particular area. And the option fee is typically that you have the option after an inspection is done to walk away and dismiss the contract, because some things you found that it's not going to be suitable to you purchasing this home.
All right, so when you do an inspection, what happens if you don't buy the home? Do you lose your $400?
If you do the inspection and you don't buy the home, yeah, because you pay that inspector, he sent you an invoice for that, and you go down and pay them for that prior to, most cases, executing a contract. The inspection is really for the buyer, so sometimes that's a cost. They can be reimbursed in closing costs from the seller, sometime at closing, if you will, to kind of offset that cost. But typically that's a cost for the buyer. And if that home doesn't fall through, that's just a cost, that they have to bear.
Okay, so you pay for the inspection. Now, earnest money, and this is before you actually close. Now, I know closing costs, people think that, okay, this is the amount that I have to pay at the title office. These are prices that you have to come out of pocket prior to purchasing the home. So say, for instance, you've seen a home for $100,000. That's not going to happen, but just for an example, and you want to get you're interested in it. All right, so 1% of $100,000 is $1,000 for earnest money. You have to pay to get it inspected, and you have to pay the fees associated with the earnest money, which is $200, $300. So yeah, guys, that's not a lot of money, but if you are playing games or not as serious when it comes to the purchase of the home, then yes, you can go down a rabbit hole with that. But obviously that's not like a normal thing. People usually don't have problems with earnest money or things like that normally, from what I was told. I don't know if you had any horror stories or earnest money. I just want to correct the correct expectation for the client going forward. Now, after the earnest money, what is the amount that they have to pay at the title company the day they get their keys?
At closing, then you have to pay the yearly. You get the yearly insurance, the hazard insurance policy. You'll get an invoice for that, and then that'll be added to your closing costs. And then you have to build what they call the escrow account. So you have to fund that account also, depending on what time of the year that you're closing. That can range 2 months all the way up to 5 or 6 months, just depending on when you're going to close on the home. So those things will be added to your closing costs, but they'll be disclosed to you, basically told. You're going to know what these are when the loan process begins, because we as lenders, we have to let you know that. And if you're dealing with anyone that's not letting you know that, that's a disservice to you in this particular process. But yeah, so that's just some of those costs as well. And because you have to build that, and that's we call that skin in the game. So as you kind of mentioned earlier, sometimes people mention a lot of free out here as far as money is concerned, but there's also some things you have to be responsible for yourself and have to be prepared mentally and financially for that process.
All right, guys, this is a lot of meat and potatoes, man. In this video, I hope you guys been jotting everything down. I hope you guys have a clear expectation. That is my goal. So when you go into the home buying process, you already have expectations for what you need to do. There is no surprises. You might get surprised anyway. That's just how it happened. But I want you guys to have a clear expectation on how to purchase your first home. But all right, so let's get to the financial options. I know we almost cutting it close on time, but let's talk about the financial options and the homestead exemptions.
Okay, the financing options will be based upon your credit score, as we kind of touched on earlier. If you're going, if you have a lower FICO score, I would say 640 and below, you want to probably go FHA financing, 3.5% down. If you go 640 and above credit score, you can go USDA financing, what they call rural housing financing. You can go and those type of options available. If you have a high credit score and not a lot of debt, then conventional financing will be your play. First time home buyer options as low as 3%. Sometimes they roll programs out as low as 1% down, right? But those are if you have a lot of student loan debt and stuff like that, that won't be the program for you. FHA would be the better play, right? Because they allow a little bit more leeway and that student loan debt doesn't count so much against you if you're self-employed and you roll off a lot on your taxes and don't show a lot on your taxes, we have a bank statement loan program, 12 months or 24 months. Your bank statement deposits are divided, and that determines your income and your buying power based upon that. That option is a 10% or above option, not the 3.5 or what FHA provides or some of the other options. We have VA options if you're a veteran, okay? And if you're 100% disabled, you don't have to pay any taxes on the home if you're a veteran as well, as far as that is concerned. So we have VA loans as well for veterans. We even have I-10 loans for clients that have EAD cards and hereby work permits and things of that nature. So basically, we cover a gambit of things and opportunities. That's why we try to capture the market the best way possible. So we have a solution for you one way or the other.
Oh, wow. Oh, man. So, guys, if you have bank statements, you getting money, have a job, you haven't, fully filed taxes, you can get a loan with a bank statement. 24 months, 12-month bank statements, and you can so imagine getting a house with a 500 credit score and 24 months worth of bank statements and, a good job for a few years. Guys, you might qualify for a home. I don't know. Everyone's situation is different, but I've seen it happen, and it's very, very, very possible. So, guys, just always make sure that you are, like I said, crossing all your T's and dotting your I's when it comes to this process, just because it can bite you in the long run. These are very long-term contracts, and you want to be as due diligent as possible when going into the process. Okay, so let's talk about the last option, which is homestead exemptions. Let's talk about that.
Okay, cool. Homestead exemptions. Real quick, I want to touch on the bank statement loan. 660 and above credit scores where you want to need it on those because they were called non-QM programs. So just in case we have the fact checkers on there checking us, I wanted to correct you on that one so we won't have to be fighting any comments on that one as far as what the bank statement loan allows, right? Okay, cool. But homestead exemptions, what it is that there are ways you can qualify to where you pay less on your taxes when it comes to a home. As a first-time home buyer, you qualify for $25,000 homestead exemption, meaning if the house is worth $300,000, you're going to be paying taxes based upon $275,000, thus lowering your tax bill as far as the home is concerned. They have other homestead exemptions over 65. I mentioned the one earlier about the veterans, things of that nature when it comes to not paying taxes, being disabled. So there's a lot of different exemptions that are available that you can save money, and you just make sure that you go through your tax office and to see what you qualify for, and some of those kick in right when the home is sold, right when you close on your home. It used to be a time where you have to wait for those to kick in until that exemption season, but now it's right when you close on the home. You can benefit from those when the tax time roll around again, thus lowering your bill. So definitely look and see what you qualify for.
Awesome. Well, thank you for coming back to the channel, man. I really appreciate you and all of your wealth of knowledge on coming to my audience and basically giving them a full blueprint, a bulletproof blueprint on how to get their first home. So guys, be sure to show them some love on his YouTube channel. His YouTube channel is Loan Officer Who Cares. All of his handles, Facebook, Instagram, TikTok, everything is Loan Officer Who Cares. # Loan Officer Who Cares. Guys, if you found any of this information helpful, do not forget to like and subscribe to the channel, guys. Please like and subscribe to the channel. It's the only way that we can actually push this content to a wider audience and allows the lights to stay on. All right, did you want to say anything before we get up out of here, Loan Officer?
Just want to say thank you, guys, man. Thank you so much, Mr. Quintel, for everything you're doing for the community, for how you educate the community. And I am a licensed mortgage loan originator, equal housing lender, NMLS number 1117854, # Loan Officer Who Cares. So it'd be my pleasure to work with you guys. I'm licensed in the state of Texas, but my company can do loans in Georgia, Tennessee, Florida, and Alabama.
Oh, okay. Well, guys, there you have it. If you found any information, like I said, don't forget to like and subscribe. All right, guys, until next time, take care of your credit and take care of yourself. Credit Coach Q out.